In this video, we're going to have a look at the JM Smucker Company, ticker symbol SJM, as requested here. If you have any other stock video requests, let me know in the comments below. Established in 1897, JM Smucker is a manufacturer of food and beverage products, with a lot of household name brands making it consumer defensive. The stock is down 12.59% over the last 12 months. So far it is up 0.98% this year. The stock is at a 52-week high of $159.92 and low of $107.33. Over 5 years, all gains would have been lost. If we look on the 17th of May 2019, you could basically buy it for the same price. But over the last couple of decades, it's performed very well. Plus you have the dividends coming in on top. The yield is currently 3.32%, paying $4.20 annually. Dividends have increased 26 years in a row, with a compound annual growth rate of 4.51% over 5 years, 5.59% over 3, and 3.86% over the trailing 12 months. SJM has a dividend safety of B- according to Seeking Alpha, with a payout ratio of 51.35%, so the dividend is deemed safe, with enough room for growth. Now let's have a look at the finances. SJM has a market cap of $13.77 billion. Looking at the last quarterly press release, highlights saw good and bad points. Net sales decreased by 12%. Adjusted earnings per share up 8%. Free cash flow was $28.2 million compared to $102.9 million the prior year. This is a big drop and is reflected in a $46.6 million increase in capital expenditures and the decrease in cash provided by operating activities. SJM did acquire Hostess Brands for $5.6 billion. Mark Smucker, chair of the board and president and chief executive officer, did say he was confident in our ability to capitalize on synergies and growth opportunities across snacking. Looking at the segments, US retail coffee saw a decrease in sales by 3%, as did pet foods, with a bigger drop of 39%. It was not all bad news, as retail consumer foods did see an increase in net sales by 7%. In terms of forward-looking guidance, the benefits from the acquisition of the Hostess brands will not be realised for a few quarters, including the cost savings and future sales, of course. They do warn of the transitional costs from acquiring the Hostess brands, the initial disruption from management having to divert their full attention from the other brands to fully integrate the operations. Let's have a quick look at how it's performed against the S&P. If you'd invested $10,000 10 years ago and reinvested the dividends, you would have a total return of 64.45%. ending with a value investment of $16,448. The S&P would have given you 223.92% return, with almost doubling the value of SJM with $32,378. Over 20 years, it has performed a lot better, giving a 420.2% return, giving you $52,000 compared to $64,000 with the S&P. Let's see what the analysts are forecasting. Tip ranks have an average price target of $132.73, which is 4% upside based on 11 analysts. Market beats have an average price target of $138.07, which would see an 8.13% upside based on 12. And Zacks have an average buy of $134.25, 5.2% upside from where we are today based on 12. From the targets and market beat, Tip Ranks and Zacks, an average price between the three is $135.01. If we have a look at value investing for the intrinsic value calculations, based on the discounted cash flow model, it has a fair price of $135.40, which is 6.1% upside. Then if we have a look at the dividend discounted model, it has a fair price of $102.34, which is 19.8% downside. If we take an average of the analyst expectations and the investing models, that would give us $124.25. With a 10% margin of safety, that will give us a buy price of $111.82. The overall verdict is SJM is a solid dividend payer and should benefit from the recent acquisition, although it will be a while before those benefits are priced into the stock price. Personally, I would like to keep it on my watch list and see how the next few quarters play out. Thanks for watching. If you've enjoyed the video, please like and subscribe.